Hello and welcome back. Good morning, fellow traders. So, I was on leave on Friday and Monday, and I couldn't post weekly review as well. So today, before market ends, I'll be posting my weekly review as well as the trade plan for this week. So let's dive directly on the intraday charts. As market was initially has opened flat and market has started trending down. I didn't trade on Friday and Monday. I had to travel. So during travel, I don't trade and market went up, took resistance at this particular place where we have marked earlier, and then the market has started falling aggressively. And as we can see, the market is in a range of roughly 18,450 levels to 18,890 level. This range is intact for the week. And for the intraday trade setup, there is a good amount of demand at this particular place, which I have opened up just before this video, and I'm expecting this market to honor and give us 1:2 risk to reward. And as of now, market is trending downwards, so I don't think so. If market gives us a stop loss at this particular place, then we can start building our short positions with a target of 18,450 levels, because this is good amount of liquidity. And once we get a stop loss at this particular place, market may not stop till all the way at 18,450 levels. So this would be a very good point where we can build up our shorts. And for the FINNIFTY market, I'm expecting an expiry between 18,400 to 18,200, slightly undercutting the previous low and giving us a good push on the upside till 18,250 if market comes at downside. And if market goes again, goes bounce back, so there is no much further bounce which we can expect in and around till 19,400. So broader range is 19,400 to 19,200. And on the international market has rallied. It's like a blow off top pattern. Market has rallied, pin bar, and if there is a follow through selling which comes up, then we might see a top for at least for the short term. This might be a top, and we might see a consolidation which might take S&P 500 to 4,100 level as well. There is a very strong demand supply zone at this particular place, weekly supply zone at this particular place of for 4,500. And before that itself, market has started consolidating, and shorts have been started to come into play. And there are certain things which I'll be discussing on the weekly time frame, weekly charts, and especially S&P 500. What are the similarities which we can see in today's market condition and markets during the Great Depression and after that? There are good amount of similarities which we can see. So those things will be discussed on weekly analysis and trade setup, because I expect that market might form a top at in and around 19,000 levels or 18,900 levels. And in the coming week, we might see further downside move. Initially, there might be time correction for a couple of weeks, and then we might see further correction on the downside, price correction till 18,000 levels, and then further beyond at 19,500 levels. If you see the overall picture, it's hardly 3.5-4% from here to see 17,500. But once we get a selling week, aggressive selling week, and if we get a breakout above 12.5 levels in India weeks as well, we might see aggressive selling at happening in Nifty, which might take us all the way to 17,500 and even below 16,800 level, because this demand zone has already been honored. Market has rallied significantly, all the liquidity has taken out, and from here onwards, if the market continues its downward trend, we might go beyond 16,800 and all the way to 15,800 as well. So let's see how the market gives us the opportunity. There is good amount of volume building up at the higher end of the range. So this kind of volume buildup usually signifies a pause and a trend reversal from here onwards. So it's better to play safe and keep a very tight stop losses and quantity limited to the risk appetite. So that is the overall trade picture and mindset we require to trade in this kind of market. One day we might see a strong rally and then again a sharp pullback. So this kind of market is not for very aggressive or risk on move, and market might come down with aggression and very sharp, roughly 200 300 point in a day. That kind of move also it can happen on any day. it can happen on either side. I'm not saying it can happen only on the downside. Yes, the probability on the downside is more because the stellar rally from all the way 16,800 to 18,800, there have not been good amount of shorts which have come into play. There was pullback and then again rally, pullback and again then rally. But right now this trend seems exhausted, and we might see a range bound movement or a mean reversion movement in and around 18,000 levels. So this is the trade plan and setup what I'm looking forward for the coming week as well as for the month. And in the detailed trade setup for the weekly, that I'll be posting by afternoon. Thank you for joining Trade Talks. Happy trading.